With the uranium miners catching a little bit of a bid recently, let's take a look at some charts. The uranium mining ETF URA is back above the 30-week moving average, but the price of uranium is still below this key moving average. And there's been a lack of volume in the uranium mining stocks, especially compared to what happened earlier this year with the explosive rally out of the stage 1 base from 2016. And I still see a lot of better looking charts in other sectors of the market, such as semiconductors and Internet of Things related technology stocks that have been breaking out with explosive volume so far in 2017. My website is nextbigtrade.com. I have a stage analysis screening tool at screener.nextbigtrade.com, and I can be reached on Twitter at nextbigtrade. Taking a look at the Uranium Participation Corporation, which is a uranium price tracking ticker, you can see that the price of uranium is still essentially trending below the 30-week moving average. And this is really what caused the explosive rally that started earlier this year to stall out, was the lack of follow through in the price of uranium. So after it started getting going earlier this year, it collapsed back below the moving average and just continued to trend lower below it. And it appears that this price level, which equates to around $20 a pound uranium, seems to be kind of a key level because it found support there at the end of 2016 and again this year. In the last few weeks, we've seen a little bit of an uptick in volume, not much, but it seems to be potentially forming maybe a double bottom here. It'll have to be seen whether that occurs, but overall, that's really been what's been holding back the uranium miners from breaking back into a new bull market. Now, the uranium mining ETF URA, again, with the price of uranium firming somewhat over the last couple of weeks, we've seen this ETF start to rally once again above the moving average, and the volume this week is probably going to be above average. So again, it's somewhat of a very, kind of a young rally, but nothing like what happened earlier this year so far. And again, it's just going to depend on what happens with the price of uranium, whether this can sustain itself. One thing to note is that there is now a little bit of overhead resistance now that we were unable to make higher highs after getting to these levels earlier this year. So there will be some sellers that'll probably want to get back to even as the price approaches that resistance once again. Now, another kind of negative sign for this early rally is the lack of volume in Cameco, which is really like the bellwether stock for the uranium miners. And one positive thing, though, is that Cameco has actually been downgraded twice in the last few weeks by some major banks, and it's actually rallied ever since both downgrades. So that's a good sign. But again, when the uranium miners break back into a bull market, I expect the volume to once again be explosive because of how destroyed these stocks are and how leveraged they are to the price of uranium. So to see a rally occur on weak volume signals to me that there's not as much interest in this market to really push it back into a bull market that there should be. Now, taking a look at NextGen Energy, this stock has actually been taking a little bit better volume and actually found bottom, just below the 50-week moving average, and is actually back above the 30-week moving average again. So it's good to see a bellwether stock like NextGen get back above the moving average, and it shows that whenever the price of uranium is firm, the stronger stocks tend to outperform and actually sustain their uptrends. Taking a look at Energy Fuels, this stock again stalled out like other uranium miners did earlier this year, but has been rallying on pretty good volume over the last 2 weeks and is starting to break back above the 30-week moving average this week. And then GoviX Uranium has actually had pretty strong volume this week, doing over 4 million shares so far. We still have a couple trading days to go, so you can see again like the basing formation that a lot of these uranium miners have been in since they went back below the moving average back in April, and they're trying to rally once again off of that base. But as I said, we're not seeing the explosive volume that we saw really earlier this year across the board in the different uranium stocks. Just only a few uranium stocks so far are sustaining volume. Now, one positive thing you would think for the commodities sector would be this new stage 4 bear market in the US dollar. But as we can see on the chart of GCC, which is a commodity tracking index fund, commodities overall are still struggling. We saw that strong rally across the board in commodities in the first half of 2016, but even with the weak dollar, they've been unable to, retake the moving average and really get back into a stage 2 uptrend. And you can see how, as commodities topped earlier this year, the price of uranium really followed suit. And I've been noticing lately the price of gold and the gold mining stocks have been unable to rally as well with the weak US dollar. So overall, a lot of these factors are combining to, potentially make it harder for the uranium miners to break out here. And again, it's really going to depend on the price of uranium, whether it can get back into a new uptrend or whether it needs more sideways consolidation before this bear market is over with. So in general, I'm definitely paying attention to this early rally, but until the price of uranium can really get back above the moving average, I wouldn't put a lot of hope into this new rally until we see that happen. I have taken a couple positions in a couple uranium mining stocks just to, build a position in case this rally grows. I'm long URA and Energy Fuels, but again, those are only starter positions for a new bull market. And what I do in my trading is I only add to my positions as the market goes into my favor. So if this market trends sideways or goes lower, I'll probably, cut those positions and wait for a real breakout. But if this breakout does grow, obviously I'll be getting more involved in this sector, if a new bull market forms. And again, to get more insight into the uranium market and other markets, check out my website at nextbigtrade.com and my stage analysis screening tool at screener.nextbigtrade.com.